Mandhania, Executive Vice President, Direct Origination, Northern Arc Capital. A very warm welcome to all of you. And a warm welcome to the moderator of the session as well. May I request you to kindly take the session forward?
Thank you. So welcome everyone. Thanks for your time. I know post-lunch, tough session, but that's why I was telling my co-panelists that let's tell them stories. Too much of gyan after post-lunch may not go well, but let's start a conversation. Let's have a conversation. Let's see how it goes. So the topic overall is MSE actually. The part of the MSME which actually matters, which is about 96, 97%. Definitely a lot has been said about it. So much gets said about the so-called credit hungriness of it. They say it's about 350 billion rupees. They say the nano is say 10 lakhs to a crore kind of a turnover. There, the credit gap is about 50 billion rupees. These are all good, big numbers, right? But we will discuss today the actual execution behind these numbers. We will discuss today the realities behind these numbers, how much of it can be tapped, what are the challenges, what are the potentials. So let's have that conversation amongst us. I will now open it up to my panel. I would request you to introduce yourselves. And for the first part, give an overall view of the MSE. When I say a view, why don't you state one or two factors that you feel are working and one or two points that you feel are improvement areas and can be better done than currently being executed. So Shweta, why don't we start with you?
Thank you so much, Aditya, for giving this opportunity, to discuss on a very, very important and an interesting topic on the current trends in MSE lending and the way forward. I think I would like to set the context since I'm just starting the discussion here. Why is this sector so important for all of us and of course for the government? We all know the numbers, but just for the sake of repetition or for setting the context, there are more than 64 million MSEs in India, and they contribute about 1/3 of the GDP. They also contribute roughly about 50% to the exports of the country. This sector has practically generated more than 120 million employment and jobs in the country, and there is absolutely no way that one can ignore this sector. It's directly linked to the growth of the economy. It's directly linked to the development of the bottom of the pyramid, right? A lot of initiatives have been taken, for the development of this sector and also for ensuring that the flow of credit from formal lending institutions is, channelized towards this sector, and it actually reaches the underserved, unserved, and underprivileged sections, So a lot of policy initiatives have happened over the last multiple years, and it's continuing. It's a journey which we are already, we have already embarked on. I think a few initiatives which have really helped. One from the government, multiple schemes like PMMY, CGTMSE, that's again the GST, implementation, Udyam registration, so on and so forth. So these are some of the initiatives which have actually helped this sector to grow and for the flow of credit to actually happen. And the combination of JAM, as we call it, Jandan, Aadhaar, and mobile connectivity, I think that has worked very well. What probably can be done going forward, I think a few things. One, how do we reach the hinterlands? How do we reach the really, really remote areas of the country, what we call Bharat, and the second is how do we incentivize the adoption of digital journeys within this sector, which essentially started from the COVID that we saw, but because of the COVID-related restrictions, because of the situation that we all went through, MSMEs were forced to adopt technologies, but the way it started and the way it has actually grown over so many last 2-3 years, I think there's a lot more that one can do. And then, I think from there on, multiple things can take up. There is a lot of opportunity in this sector, and it's not just the responsibility of the government, but also a lot of participation from the private sector is happening and will happen. And the sector is obviously bound to grow from here. So yeah, that's a little bit, and yeah.
Thanks. So Amit, I move over to you and similar, why don't you just introduce yourself and your overall thoughts before we do a deep dive?
Sure, thanks. Hi everyone, my name is Amit. I represent Northern Arc. So adding to what I think, setting the context, right? I think given the numbers, it is important for us to realize that this sector is highly heterogeneous. We're talking about a wide range of businesses, range in terms of size of businesses, kind of businesses, industries that we operate in, and in the kind of clientele we're talking for NBFCs or banks, right? So what is required for addressing the gap which is there is to have differentiated strategies to address these specific segments. The second aspect is in terms of the kind of diversity in terms of requirements of finance, right? So limited not only to term loans, but we're talking about financing capital investment, financing working capital. So differentiated products are required, differentiated requirements, financing, supply chain, and so multiple aspects of requirement of credit is something important. And yes, I guess as we see, as we saw in the report as well, right, there is stark difference between certain segments, certain aspects of the whole range where the gap is much larger, wider compared to the other segments. So I think importance in terms of focusing on those segments, what are the challenges, both from a government perspective and participation from private NBFCs and banks to address the specific needs. A lot of awareness to be created with these MSMEs to avail the benefit of credit and the impediments they face for availing this benefit is something which is required. A lot can be talked about how digitization has helped the sector, but I think a lot more can be done over there, coupled with the India Stack and the government support and the availability of digital data through bureaus and other aspects, other databases. I guess a lot more can be done in terms of how NBFCs capture the data, how they underwrite and build algorithms based on which more and more MSMEs, which are largely NTC today, can be brought into the ambit of formal financing. So these are the initial thoughts. Yeah.
Thanks. So Abhishek, same. Let's get your introduction and your overall thoughts before we deep dive.
Sure, thanks. So I'm Abhishek, partner in Microsave. We work a lot in the MSME space. What we've observed is that there is a lot of push from the government these days. That we have already seen, Shweta just touched upon the schemes that government is bringing. What is required is that government needs to differentiate the sector, especially the micro-enterprise sector. It has done well to sort of reclassify the MSME sector. Micro-enterprise as a segment is still pretty big. So when we say 1 crore as a turnover, it would mean that even a rediwala or a street vendor is there in it, and someone who has a 1 crore turnover has a proper registration is also in this. And the needs and aspiration of these different segments would be pretty varied. So to start with, maybe there is a need to even further identify a nano enterprise segment so that all the schemes from the government, the policy action from different government agencies, and the products and services from financial institutions are aligned to these two broad buckets, nano enterprise and maybe the upper segment. So that's one. The other thing is to understand that if we want to become a $5 trillion economy, it's very important that we acknowledge that large part of India lives in rural areas. Lot of entrepreneurial activities happening in the rural area. So how can we tap some of these entrepreneurs? How can we provide access to finance, access to skills, access to information, access to network to these enterprises in rural areas? So what has worked is, of course, schemes, as some of my colleagues have just told. Apart from that, there is a lot of push around digitization. I think the push around ONDC, which is democratization of e-commerce sector, is a pretty important push. Right now, I think they are still in an initial phase, but I think in a couple of years of time, there will be a huge amount of sellers and buyers on that network. And we should be able to see that a lot of data is getting churned from the platform. Add to this, Open network should also sort of flourish in this. They are already working with GEM, but I think if they dock with ONDC, again, huge amount of data is going to get churned. So these three things are pretty interesting, areas.
Thanks. So I think one realization is that for micro, we use 0 to 5 crores as a turnover criteria, and that is too big a cohort to consider any significance statistically. As Abhishek said, even if you see tiny or micro, whatever you want to call it, that is 10 lakhs to a crore. And a 10 lakhs enterprise or a 10 lakhs business will behave very differently than a 1 crore business, right? And by definition, micro is actually 5 crores. So this is something I think segmentation is something that is definitely required. It cannot be looked at through one lens because if you see, for example, if you see PL, right? PL, you see it 0 to 5,000, 5 to 10,000, 10 to 20,000, 20 to 30,000. So below 50,000, there are about 6-7 slices which come in PL. And micro is 0 to 5 crores. So it's a very different way that we are looking at them. And I think each cohort and each sub-segment behaves very differently. So talking about behaviors, Amit, let me go to you because, see, we are talking about bottom of the pyramid. We are talking about 10 lakhs, 20 lakhs kind of turnover, and we're also talking about digital. So how does, digital, fintech, PL, millennium, they chime together, but how does digital 20 lakh turnover for the year, bottom of the pyramid? So what are your thoughts around that?
Sure. So see, when we are talking about digital journeys, right, we have to start from how the customer is acquired to how we validate the KYC of the customer, how do you underwrite the customer, how do you collect the data, and how can you provide the kind of TAT which a typical customer would want, right? Now, if you look at this segment, and if I talk about the kind of players we have observed, both in the fintech world, the sector is very different compared to a personal loan segment where the data requirements are very different. I think the personal loan segment has focused on acquisition of customers through digital channels by focusing and investing in digital marketing, whereas in this segment, a lot of acquisition actually is virtual, through physical through branches, but a lot of digital acquisition is possible today through partnerships, talking about either embedded finance or working with partners which could be e-commerce partners. There are partnerships available with payment services providers, so on, right? So that sort of digital acquisition is possible. Increasingly, we see the trend increasing largely from a payments perspective. The kind of merchants which are availing the payment services are much larger. Then when you come to, so once the acquisition, but still I guess a lot of customers in the hinterlands are still getting acquired physically. Then getting the data from them digitally becomes difficult. But the other aspect then I would want to move to is how do you do the KYC? So in a business loan segment, if the loan has to classify as a business loan, it is important to get the MSE classification, where Udyam registration is a very welcome move. But there are practical challenges of how one MSE can get registered, right? There are challenges around what sort of mobile number, etc. So if those challenges, increasingly we see larger registrations possible through the interventions of the government, and I think a lot of work being done by NBCs and Mitex. That enables you to qualify as a MSE and then avail the benefit of what was going to be qualified as a personal loan versus now getting qualified as a MSE. So that is a big, I think some work needs to be done to get this registration more streamlined. And then comes the aspect of how you underwrite. So the variety of data points are today available. The bureau data is fairly rich with the kind of NTC origination over the last 3 years. I think a lot of these customers have now become available, with data history available with bureau. Then there are layers of data, including data coming in from e-commerce platforms in terms of transactions, payment platforms in terms of, again, the, volume of trade business an MSE is doing. Account aggregator, again, is a different important aspect where this is relevant for even the sub 20 lakh segment, wherein we have inflows in the bank account of the customer, and if account aggregator services are utilized better, then digital underwriting is possible. I think GST is not so much relevant for this segment, although for the larger segments it's still available. So what I'm saying is, I guess KYC and underwriting, if one can solve for, which will need a lot of work with the MSEs, the digitization aspect can be covered much larger. I think today it is largely limited to embedded finance and short tenor financing, where one is able to decide on the small ticket and the short tenor loans. But for larger ticket financing, still today, the preference is to have a combination of physical and digital journeys, wherein a physical presence is required. I think the other aspect is in terms of availability of algorithms. So as the data has been availed over the last 10 to 12 years, we see a lot of NBFCs and fintechs now being able to build algorithms which add into the journey. So based on the initial run of the algorithm, they are able to decide if this will go for a video PD or a physical PD, and that can improve the journey and the TAT. Then the loan servicing, typically I think for this segment, it's I think largely a combination of we see a lot of customer initiated digital payments coming in for collections, but I guess a fair amount of collection in the hinterlands today still is cash. So the digital aspect through this journey, I think it's important to sort of focus on smaller segments like how you solve for KYC, and the kind of data which is available now supports you in terms of building algorithm. I think that's the trend that we see. Yeah, I guess the near stack, etc., I think is adding to the whole journey. Yeah.
Sure. So you spoke about KYC and algorithms, and Shweta, if you want to come in here, so when you talk about alternate sources of data in say again a PL kind of scenario, so it's flooded with alternate sources of data. I mean there's alternate to alternate kind of sources of data, but in this kind of micro, nano kind of scenario, what are your views of algorithms? What are your views of parameters, attributes, or alternate data sources?
Right. So, right, I think Amit covered a few pointers on the digital journeys, and it's well understood that now we are seeing a lot of innovative ways of underwriting in this segment, and there are new age players who have come in and developed a lot of new ways of underwriting and credit assessment for this sector using alternative assessment methods. Now, naturally, if we have to at a very high level divide it in what comes to my types of data perspectives, the first would be to do with the KYC verification and identification of the entity, wherein your eKYC and the data with respect to incorporation of the entity and such things can act as a important tool. The second could be the data which you can gather for cash flow assessments. Now, even in these smaller segments, considering the kind of internet penetration that we have seen across India, and I think as on December 22, India had almost 700 million active internet users, and this number is only growing. And we are expected to touch 900 million kind of number by 2025. So these are not small numbers, and it essentially, shows that internet penetration is very much there. Mobile usage is very much there. So even in the micro segment, if one tries, really, then there are ways in which we can gather a lot of data related to cash flows assessment in alternative ways, especially if the entity is somewhere in the e-commerce journey. You get a lot of data through the e-commerce platforms in terms of their transaction data, also then using embedded finance, etc. Also the bank statements. I mean, if there are so many Jan Dhan accounts which are already opened, and a lot of these entities have started at least accepting digital payments, through mobile wallets, through banking channels. So the moment there is an inflow of, money coming into the bank accounts, the bank account statement itself can also prove to be the first point for your cash flow projections, etc. So I feel e-commerce data, bank statements, GST, if at all it's there, and multiple other sources, so we can categorize as a cash flow related data. And the third could be behavioral data. For example, how are they making utility bill payments? Are they really delaying those payments? What kind of internet penetration these entities are having, which essentially will give you some sense on their, market reach, their customer reviews, and so on and so forth. So maybe if we slightly apply our minds and maybe look at it with a different lens, even in this segment, because there is so much mobile penetration, internet penetration, and because the entities have matured to some extent over last few years, I feel there is a good possibility to have alternate sources of data even in this segment. Yeah.
Right. So when we did this study, we were, as I said, focused on the 10 lakh to 1 crore turnover segment. And since we wanted a proxy for that, we kind of looked at 3 types of loans. We looked at business loan, we looked at agri, and we looked at mudra. So one of the things that we found is that obviously there's a huge presence of rural, semi-urban as compared to urban, right? Because obviously that's the kind of sector we were going for. And we also saw rural and semi-urban kind of mimicking urban in a lot of ways. When I say mimicking, I mean that the NPA, 90 plus, was more or less very similar across all these 3. I mean, all 3 were not good, but it was very similar across all the 3, rural, semi-urban, and urban. So, turning my attention to rural, Abhishek, give us a few of your thoughts in terms of if in this mix of 10 lakhs to 50 lakhs, I try to give it a rural flavor. Right? Look at it only from that perspective. How would it look? What are the challenges? And what can we do better?
Right. So if you see, almost 9 crore women are there in the SHG ecosystem under NRLM, SRLM ecosystem. And we did a quick research in few of the SRMs. We found that 1 out of every 10 SHG women was a serious entrepreneur and demanded that kind of recognition as well in terms of financial products that are being offered through SHG bank linkage program and other financial assistance. And when we looked under the hood, we found that many of these women, in fact, the way credit bureaus identify SHGs, they generally identify SHG as a unit. Now the problem is that since last 2 decades or 3 decades, since when SHG movement is on, we see that many of these women have been paying for decades, has very good repayment habits, but they are still not showing up in the mainstream financial ecosystem because they don't have any presence there. So one important area is where how can we bring credit bureaus together, and what needs to be done in terms of the way products are designed in the SHG ecosystem. There is a bit of policy advocacy in terms of what kind of right RE would be there to input the data and what kind of channel will report these kind of transactional records. So that's one. The other part is the overall product development. So from financial institutions, I think the millennials are now also joining the rural SHG ecosystem. So they demand their options and choices and awareness is slightly better and broad compared to their the previous generation. So they demand more customized products, and entrepreneurs typically are ahead of that curve. So you would see that a lot of push is there from the government, from the Ministry of Rural Development to develop enterprise finance programs. So we in Jivika are doing that program in the pilot stage itself. In 3 to 4 months, we're seeing rapid progress. Almost a $1 million worth of portfolio is created in a quick period of time. So there is a proof of concept there. The idea is to now ramp up, at a national scale. So together with I mean, if we want to really focus on rural area, we have to focus on rural entrepreneurship. Women are part of it. And identifying them as good repairs and then offering right products to them, I think could be a game changer. The other part is that almost 40% of the entrepreneurs are involved in dairy and allied activities. Now, it is very important to have some sort of a cattle insurance product bundled into it, because that gives huge amount of comfort to bankers and the ecosystem players. So if we do these 2-3 things, I think it might just prove to be a game changer.
Thanks, Abhishek. So when we look at this from the types of financial institutes, so the public sector is obviously there. It is the biggest player. We see in these segments, private banks and NBFCs come up. Their loan sizes are bigger, though their exposure to the sector is still smaller. But the loan sizes, the loan ticket sizes are bigger, and their delinquencies are much smaller. However, in this segment, the cooperative banks and the regional rural banks still have a very good presence. When I'm saying very good, it is around 15-20%. So if you do it in a standard PL, HL, they will be probably 1-2%, right? So Amit, I come back with a different spin on the digital this time, that as I said, there is cooperative banks, there is regional rural banks. These operators have a high degree of faith and stickiness with the customers. So what are your thoughts on enabling them with technology, the things that you spoke about in terms of KYC, etc., but how does these things overlay on a cooperative bank or a RRB which works in this segment?
See, I think what makes a cooperative and a regional rural bank is the fact that they have a very regional focus and a geographical focus. I think the fact that they've been in these geographies for long, and they've built a lot of faith and understanding around these customers, the industries they operate in, which are difficult to replicate for a new age NBFC or a fintech, right? Now, how can that information, how can that knowledge be translated into data points which can be availed by other newer players, because the demand still continues to be high, right? While cooperatives and regional rural banks are contributing to a large share of what the demand is. The demand continues to be high, but there is to be a way of, I think if, these players can adopt technologies, and I'm not about technologies, I'm also talking about means of capturing data, which will then enable, other players to sort of use this to provide more nuanced way of financing. I think that is one. Yeah, and from a digital perspective, I think what is also important is ensuring that the databases like the bureau and the other databases are equally enriched, and all the players in the industry, including the cooperative banks and regional banks, should be providing this data. So access to repayment data, access to account aggregator, because a lot of the issue that we face with bank statements is largely from cooperative banks, where there is no way of getting a digital statement from a cooperative bank. So if this adoption is there, I think the access to finance to the MSMEs in those, who are working with these players will actually be better. I think it will enable the credit growth for them.
So, Shweta, if we look at the retail scenario, right? So if I look at policy initiatives, there is so much going on there. There is so much amount of supervision for good. There is so much amount of push. I'm not just talking about a regulatory framework. I'm not just talking about an RBI. I'm saying that there are so many industry bodies and policy initiatives being taken. So what are your views on overlapping that to this segment of nano or tiny, whatever you want to call it? But because I think in the entire hierarchy of MSME, in the entire glitz of MSME, this 10 lakh to 1 crore really gets lost. So what do we do?
Right, I think that's a very interesting point, Aditya. What I feel is, yes, in any sector, the push comes from the top. It starts with the government, and government actually sets the tone for the overall policy framework in the country. I think a few policy initiatives which, I would like to highlight, and they have really demonstrated the success over the last few years. I would like to start with Pradhan Mantri Mudra Yojana, PMMY, which is focused on providing less than 10 lakh ticket size loans, collateral free, third party guarantee free, directly, giving loans to non-corporate, non-farm sector, directly impacting the manufacturing, the trading sector, agri-allied sector. This scheme itself has actually proved to be so successful that since the launch in 2015 till now, if you see the numbers, under PMMY, more than 43 crore loans have been already sanctioned and disbursed. And the total amount is actually more than 25 lakh crores. It's a huge number when you actually look at it from the perspective that these are small ticket loans. These are actually less than 10 lakh ticket size loans, unsecured in nature. So I think PMMY has really demonstrated a great success in, transforming credit to this particular sector. The second one is the push from government in the form of providing guarantees, and one of the best works that has been done in this space is through the CGT MSE, So again, I mean, this current financial year, in the first 7 months itself, CGT MSE has provided more than 1 lakh crores worth of guarantees. 7 months. 12 months, and this year we are there in 7 months itself. So the pace at which this policy and the program is actually going itself is also a wonderful success story. Again, it's not just about the policy, but the fact that the government is taking recommendations from the industry bodies, from all the participants in the ecosystem. For example, I was just going through some of the recommendations which went to CGTMSE in the last 2 years, and they were actually implemented. To give some examples, the guarantee cover per loan got increased from 2 crores to 5 crores on 31st March. The entire annual guarantee fee structure got revised, and now we have the guarantee fee as low as 0.37%, which itself gives so much incentives for all the participants to come and actually utilize this CGTMSE schemes. They have also given an option for one-time, one installment settlement of the guarantee, which earlier used to be a 2 installment kind of structure. One very beautiful thing which, I was not aware of, to be honest, and I think for the benefit of everyone, I would like to highlight that there are certain state-specific tweakings in this CGTMSE policy which have happened. Last year, for the development of Manipur state and the SMEs over there and providing more credit there, what the CGTMSE has done is that 85% of the guarantee cover is being provided by CGTMSE, and the balance 15% guarantee is being covered by Manipur state. Together it covers the 100% guarantee. These are beautiful initiatives focused on specific region, right? So we have seen a lot of initiatives which have happened, and continuously improvisation is also happening there. Other than that, if I have to talk about schemes for MSCs, it's not just about the credit flow, but also strengthening the sector. We've seen a lot of work being done by NSIC. What they've done is, helped this entire sector and small enterprises to become more and more competitive, and not just from the credit perspective, but also helping them on the marketing front, on the technology upgradation front, providing them incentives to participate in international fairs, and creating consortia so that these small entities can come together and bid for larger tenders, and so on and so forth.
Thanks.
Right? So I think, yeah, that's.
Thank you. So actually, all was not great in terms of the data that we saw in the report. A very worrying data was the delinquency data. So for business loans, the delinquency was about 12%. For agricultural loans, the delinquency was about 22%. For Mudra, again, I think it was about 10 to 11%. So, Abhishek, how do we solve this? One is that unless this sector gets into whatever credit literacy, credit habit, scaling it beyond a point will only make the problem larger and larger. And actually, in some portfolios like agri, it is more than 20%. That's disastrous. So your thoughts on how do we improve on this? Because if we don't, we won't be able to scale it up.
Yeah, that's a very interesting question. I think there are almost 1 crore entrepreneurs already under the Udyam Assist portal. So we know them, and we know them because these entrepreneurs had taken loan from banks, and Udyam Assist portal typically gets these 19 odd data points. This is then pushed to SIDBI and through SIDBI to ministry. So perhaps what we need to do is that maybe stabilize what we already know and we have already identified, and then move forward. So let's say if we are getting a lot of delinquency in a particular sector, we would be able to quickly understand, what kind of profiles are creating issues, and if a particular kind of capacity building inputs needs to be provided, because many a time it's not willful default, it is because of the other issues that enterprises typically face. Many of these enterprises that we see these days, they are first-time entrepreneurs. Their parents perhaps were either agriculture farmers or, they were in services, but many of them are either willingly or maybe due to circumstances are finding themselves into entrepreneurship. Now they don't have networks, they don't have acumen from their parents on how to run a business, and many a time they burn their hands while running these enterprises. So the point is that you have these 1 crore odd people registered under Udyam Assist portal, almost 2 crores if I'm right, in the Udyam registration. Maybe treat this as a universe and provide non-financial inputs to this universe, and see if they can, they can get strengthened and absorb better loans.
And as you rightly said, that many of them are first time, so they genuinely require handholding and education as we go across. Thanks. So why don't we open it up for questions? So anybody wants to ask anything to any of us? We couldn't be that clear, and we were ourselves confused on some of the answers we were giving, so I'm sure you guys have questions. No? Okay, so no worries, let's wrap it up. So why don't I have a very quick 30-second summary from each of you, and I want this summary to be forward-looking, right? That what do you expect this sector to be doing the next 5 years, right? To be in the mainstream of credit, right? So forward-looking, quick 30 seconds to a minute.
Yeah. So I think if we look forward, right, the contribution as we become a large economy of MSME sector will only increase, right? What is required is for us to, I think, innovate in terms of how we digitize the data, how we use technology to digitize the journeys, how do we build algorithms which are more focused on the nuanced segments, not painting everything with the same brush, defining products which are specific, meeting the specific requirements, which will address the issue on delinquency as well, right? So going forward, I think the kind of flow that we expect from the sector is pretty large. The opportunity is fairly large. I think support of government initiatives, India Stack and other mechanisms should definitely help us address. But I guess it is for us as industry players to ensure that we, invest in these innovations and, sort of processes to be able to provide access to these segments.
Thanks.
Hi, so yeah, I think just to quickly summarize, like we know that 50 crores plus Jan Dhan accounts are already opened. I think going forward, the accounts will start getting utilized, and as and when these small enterprises start creating, journeys through these accounts, we'll have more and more credit histories getting built, and that will also assist in deepening the reach in this sector alongside. While that happens, I think parallelly, as Amit rightly said, the digitalization in this entire sector from all perspectives, from lenders' perspectives and also from the borrower's perspective in terms of adopting new technologies will also help this sector a lot in going forward. Yeah.
Thanks for that.
So my opinion is that first classify nano enterprise segment as a distinct segment, then work to integrate different schemes, policy, financial products for this segment. Other than that, I think government has done a lot in the last 5-7 years, and they are increasingly building the digital ecosystem with ONDC, OCAN, and account aggregator. And then there are different schemes and portals available. So Jan Samarth is there, for example. Then there is a Udyam Assist portal. There are other portals. I think we need to have linkages between all these schemes and policies that are going around. Better convergence of these players, I think, would be able to provide, would be able to provide fillip and be a catalyst that we want to see them.
Thanks, Abhishek. So, from my side, as a bureau head, we have two distinct bureaus, right? We have an MFI and a retail. And what we keep saying is that there is definite overlap between the two bureaus. Now, however, the overlap is MFI-led, right? There are a lot of MFI, I won't say 90% of the MFI institutions also check the presence of the individual in the retail bureau, right? That's how they consume the reports also. However, going forward, say 5 years, whatever the time period is, the retail sector has to get MFI oriented, if you can understand what I'm saying. I mean, the bottom of the pyramid will keep going up. They will start getting graduated from smaller loans or from smaller ticket BLs to a larger ticket BL. So any retail footprint will have to mandatorily check for the MFI footprint, right? So that is what I think the industry is headed towards. But thank you all for being patient listeners, and have a great day. And I thank my panelists a lot. Thank you.
For keeping us well in time, well chaired. We thank the esteemed moderator as well as the esteemed panelists. We do have a small memento that we would like to present to you all as a token of our appreciation. May I request the team to please bring it forth? Please do collect it. So ladies and gentlemen, the good news is that we are not behind time, so we can have a very relaxed tea break. But I will still request you all to please join us back so that we can start the post-tea session at exactly 3:15. Well, I'm not really sure whether they are serving tea or not. It says networking break. So I guess if you can grab a tea, have a tea and have some chacha over it. If you can't, still have a chacha. Thank you and see you after the break.